Okay, good morning, guys. Hope we're all doing well. Now, just let me know if the stream's coming through okay. It seemed to drop a few frames. I'll spit it out. A few frames. That's a tough tongue twister for me. Anyway, I was just checking the streaming program. Seems okay. Just it had a couple of internet problems. I don't know if it's me or just overloading the system or what's going on. But anyway, we look like we're going well. So we'll go from there. So welcome. G'day, Bobby, Jason. Hope we're all good. So today, I sort of want to recap of what we were talking about yesterday. I think it was an interesting night, really. Um, saw a few. Obviously, the market sold off, but it started to sell off in the start of the European session. So the market, the Dow was down coming into the open, and it really didn't move that much when you look at it from from open to close. It obviously opened down. But then that was pretty much the low of the session, I think, both on the Dow and the S&P. But the Nasdaq actually went higher. So we're going to look at some macro markets, which we were touching on yesterday. Just because the market was down last night, it doesn't mean there's going to be a big sell-off. There's going to be some heat coming out of the market. It has to be. And after a couple of sessions like that, probably would have expected a bit of a sell-off on Monday night because of what happened on Friday night, 800-point gain. Just expecting people to lock away some gains, but the US added some more gains on Monday night. So it was due for something. I mean, you can't look at over 1,200 points in the Dow and not want to lock any gains away or at least making further buying tentative. I know the market's been very, very strong, but seems to be some over enthusiasm, like we said, disconnect with fundamentals and all that sort of stuff. I know there was the unemployment rate in the US dropped slightly, and I think potentially we're looking at that too. We've got high unemployment because of what's going on, and everyone's now looking at, well, if we go off what the US is doing, are we getting back to full employment soon? But I think the discounting what is going to happen next, I would expect anyway with companies, they've got to restructure. The longer the lockdown goes on, the more they're going to, their profits are going to be crimped, and they have to make back some of those losses. And one of the ways is to tighten and job losses, things like that. So not everyone's going back to work, unfortunately. I think there's going to be a lot of people that are going to come out the other end, no support from the government anymore, and they've probably lost their jobs. So there's going to be a few things. Yeah, and they're looking towards FOMC tonight, what Bobby just said. So that probably why they, a few more gains on Monday, but a bit of a locking away tonight. Now, don't expect the Fed to say anything too bad. I think they're going to be looking to see how they quantify the losses, due to the pandemic. So I think that's going to be a key thing that people are going to be looking out for. Potentially, they could come out and say we're going to further stimulate if we have to, which could buoy the market again. We don't know, but up at these, if we're down at the lows, you hadn't rallied so hard. I think it's a different story coming to FOMC, but the fact that it's rallied so hard, everyone's looking to how is this market can continue up? What's going to trigger it to continue up? I mean, we're running out of reasons why it should be continuing to go higher. Like I said, Nasdaq pushed into all-time highs again. So that basically opened stronger and rallied from the open, whereas the other two, the Dow, the S&P, the broader market, were down on the open. But that was, like I said, that was pretty much it. So we'll have a look at those now. Look at the S&P open down, but that was the low of the day. It sort of grind its way back up again. The Dow, same sort of thing. So a bit of negativity around, but I don't think it was negativity because of a major sell-off. Everyone's expecting that. And don't forget, you've got Trump elections coming up. So there might be factoring in, I was reading this morning, Joe Biden, who's head of Trump at the moment. So if it's looking like he could win, that could be a factor that's going to weigh down the markets, because I don't think he's as market friendly as Trump. Trump does everything, tax cuts, all these sorts of things to keep buoying that market just so that he can see how good he is. So I think he's not too worried about the actual economy as such. So this is my view, anyway, my personal view. He's more worried about getting re-elected, and he's doing everything in his power to get re-elected. Now, if the market's looking like Biden's going to win and he's not as friendly, they could start to, you might start to see a bit of pressure coming into the market, but we'll see. I mean, that's not till, I think, November. What are we now, June? So it's still a while away. I mean, things can change, and you can see that he's leading, and then Trump comes out and wins. It's kind of one of those things you can't factor in too much because it's still an unknown. It's only other registered voters. I mean, there's a lot of people going to come out of the woodworks to vote, like they did for Trump. whether that happens again, and it sort of throws a cat amongst the pigeons, and probably the market will rally again. But we'll see. But either way, I think the thought of that at these high levels, you always got to remember where we are of what could be happening. So not much to say apart from the Dow, and look at the Nasdaq opened. This was the open, rallied from the open, whereas the other two were down, and held on to the gains into the close. Bit of profit taken into the close there, but it was still up for the session. If we go over to look at correlated markets, so we're talking yesterday about gold. G'day, Robin Mike, how you going, mate? Any questions, feel free to chuck in the chat. Now, looking at correlated markets, like I said, gold, Aussie gold, looking at copper. Copper's a big one. The Aussie dollar, we'll look at those, because I just want to, and look at the US dollar. So this is what, if they all sort of move in tandem in a negative way, then that's where there might be some concern and things start to snowball. The sell-off might snowball, because everyone's talking about it. Everyone's wondering why we're so high. So as long as it's going higher, that's fine. You can wonder as much as you want. But when things start to turn and the correlated markets all start to show similar signs of cracks, then that's what we're going to be worried about. Last night, we didn't see that. Looking at gold, don't forget, US dollar headed south. Now, that's a safe haven. If there's a market going to crumble, the dollar's going to go up. The US dollar you would expect to go up. Okay. Instead, it had a bit of a bounce and then sold straight off into new lows. All right. So we'll look at that. Actually, just look at that now. You can see that little bit of a pop. And that was when the market started selling off, got to the highs, bang, sold straight back down again for no particular reason, as in equity markets were under pressure at that stage and the US dollar comes straight down. So that's not, to me, showing any safe haven buying into the US dollar if we're going to see a big sell-off. Now, the thing is, we've got to remember, it is down in that support zone. So if we look at support, it's not, it's plunged straight through here before this massive bounce. It has provided some support previously, which we mentioned. And where was it? Moved on too far. Whoop. Back here, I think, as well. So it's not hard and fast. It's not a clear-cut support zone, but it's something where there is a zone there. This could keep drifting lower and then bang up like we did back then, or we could bounce straight from now. But either way, longer term, the market's still heading south, where the anchor to that downtrend is still, what we're looking at, 97, so 97 even on the index. Okay, so that's something you've got to have your eye on, whether this continues low. This looks like a good sell-off here. We're grinding back up, higher, lower high, and plunge again. Okay, look where the stochastics are, that buying pressure. Buying pressure's tried to lift it from oversold to overbought, and we're not getting too far. Okay, so there's still some pressure on the dollar, which suggests that there's no safe haven into the dollar, which suggests, the equity market is just taking a bit of a pause. We could get some consolidation up at these levels on the US and then bang on higher again. We don't know. If we go over to the Aussie dollar was, that bit of a sell-off, and that was due pure and simply to the US, the indices at that stage during the European session. That was about, what time was that? It's about 6:30. So, similar time they all started to sell off. You look at, where are we? The mini, the Dow, about that stage, 4:30. Sorry, what did I say? 6:30. 4:30 start to sell off here. So the dollar started to bounce, sell off about 6:30. So it's a bit later on, after the markets are sort of starting to sell off in the major indices like the DAX, the Dow. Hang Seng actually held up okay, which is quite surprising. I think they've copped a beating previously, and they're sort of hanging in there a bit better. So we'll see. Now, Aussie is what we're talking about. So the Aussie, a bit of a sell-off there, which you're going to expect. There's so many buyers loaded up long. Okay, so that is so much fuel for a bit of a correction. So you're going to get these sell-offs, especially when you come into a resistance zone. We've been talking about this for a while up at the 70 zone. This area through here, which is touched on back in July last year. We touched on there at December last year before the big sell-off. We come all the way, roaring back from these lows. So basically there hasn't been a pullback. We've had these pullbacks, but there hasn't been a key correction right off these lows below 56. So there's a lot of fuel stacked up on the long side. So they're going to get tentative up into a resistance zone, which you would expect. And if you don't get tentative up here, you just consider it's going to keep going higher. So at the moment, we can see that potentially that's what they're looking at, the 70 zone, 70-50 on the Aussie. Bit of a sell-off when we've got a decent sell-off in the indices, but it's bounced back a bit. So it'd be interesting to see how that takes that. If we start to hold up above this level at 68.97 and consolidate, expect it to push up and through again. All right. So that's what we're looking at the Aussie. So that's a correlated market that's been going hand in lockstep with what the US is doing, what the equity market's doing. Equity market's up, the Aussie risk on into the Aussie as well. Risk off into equity markets, risk off into the Aussie as well. Whereas the euro keep plugging up because the US dollar sold off. So that was about when the US dollar sold off, I think. No, I'm on the 4-hour market. All right, go back to the 30-minute. Yeah, when the US dollar turned and headed south, euro bounced. So the euro, if it grinds lower, we could get that spike back up again. So nothing much has changed. We've got a bit of a pause, probably because the FOMC is coming up. I think more than likely because of FOMC, because of the highs, and everyone trying to lock away some gains because of the slightly unknown. Now, if nothing much changes with Powell and what the FOMC says, don't expect too much to change with the market. I wouldn't see a big correction coming just yet. Now, if we start to see in these correlated markets like the euro start to plunge, the Aussie start to plunge because the US dollar is, rallying quite hard, then we've got to be concerned. I think FOMC, what they're going to be talking about, the Fed, is looking at longer-term interest rates. So I think longer-term interest rates are starting to creep up. So they might want to flatten that curve a bit, meaning contain the longer-term interest rates, meaning that the interest rates are lower for longer in that respect. We're not going to get inflationary problems. So that's one way to do it, is to flatten that curve. Okay, we'll look at gold again. So gold, this is Aussie gold. Now we're talking about this big sell-off. It come back into this zone, so at 23.90, and it's bounced. And that's more got to do with the sell-off in the Aussie than a rally in the gold. Now this could actually look like it could pop higher as long as the Aussie does sell off again. I mean, if the Aussie, let's go back to here, if the Aussie starts holding up above this level, don't expect gold in terms of Aussie dollars to do too much, okay, because it's more linked to that. Now, if we take a look at what gold did, it did bounce. So we were talking about this yesterday, and now if it didn't start to roll over from here and hold a lower high, don't expect it to trade down through this 1660 zone. Instead, it started to bounce, and that's more conducive for going from bid to offer. Offer around 1750, bid around 1660. So if you look longer term, just because it's broken this uptrend here, just because it's broken that doesn't mean anything. It could be consolidating the high. So if you look at a longer term, let's go to a daily. Daily. It's probably not so good. So we've had this big sell-off, big rally back up. If we consolidate these highs for longer, we chop around here. If we go back up to 1750, we have a bit of a sell-off again, but we just hold between that sort of range, then just keep an eye on it, because this could mean that the longer you consolidate that, the more likelihood I would expect it's going to go higher. And I think that would be more conducive to a bit of a sell-off in the markets. But it'd be interesting to see how it goes with the US dollar again, because a rising US dollar puts pressure on gold. So really, the US dollar sell-off is probably why gold had a bit of a run-up last night. Not because of a safe haven as such. I don't look at that as safe haven buying. I look at that more as a bit of a short squeeze also. Short squeeze, everyone loves gold. The market sells off. You naturally get retail buy into it. You've got the US dollar heading south, so there's a few factors that obviously going to support gold. Doesn't mean it's buying as a safe haven. I mean, these people who've been buying up here could easily get squeezed out from now as a bit of a run lower. So just be wary of that. So we've gone through those correlated markets we mentioned. I don't believe gold is rallying, so I don't believe it's correlated to a sell-off at the moment. I think it's more US dollar based. Obviously, a bit of a bounce off support. People just love gold. You've got the Aussie dollar. You're going to expect a bit of a sell-off, and that's just purely because we've got a bit of a sell-off into the indices. But, I mean, they didn't do too much through the US session, so keep an eye on that. Copper was the other thing that I just want to touch on. Copper is correlated also supply and demand. So if we're expecting a major sell-off into equity market, expect copper to head south, but it didn't. It actually did the reverse. It went up. So it's starting to push up to resistance. So longer term, look at the 4-hourly chart. Longer term, it's back where just prior to the sell-off, we had these supply-demand issues with China, the trade deal. Then, lo and behold, the market got poleaxed because the pandemic, and it's straight back there again. So it's straight back up to this level, this zone. And like I said, it rallied last night. So that's not conducive to a major correction at this stage. I'm just saying, I'm not saying there won't be a sell-off. I really do expect there to be a bit of a sell-off. But at the moment, we had more of a pause in equities than anything else. Nothing much else has changed for the last few days. All your correlated markets, more just a pause in equity markets, which you're going to expect, a bit of profit taking, and that's about it. So that's why I'm viewing the markets at the moment. Like I said, if you've got any questions, feel free to send an email to support@tradesetup.com.au. If you're on TradingView, take a look at our profile if you want some more details on the website, and join our YouTube channel. Anyone else got any questions, you know where to find me. And thanks very much for joining me, guys, and we'll speak to you soon. Have a great day.